What is up, everybody? It's Curtis. Today, we're going to talk about something that could literally cost you hundreds of thousands of dollars over your lifetime, okay? That's saving your money. I mean, everybody keeps telling you, save your money, right? Your parents say it, your teachers say it, every financial guru out there, every article you read says it. They say, put your money in your savings account and just let it grow. But what if I told you that saving your money the way most people do it is actually making them poorer? What if I told you that every single year your savings account is quietly losing value and you probably don't even realize it? I'm not here to tell you to blow your money on random stuff, okay? I'm just here to show you the real math behind inflation and something called net present value. Maybe something some of you have heard of, maybe some of you may not heard of. So stick around for that. If you can understand why your money savings are not growing and it's just one of the worst financial strategies out there, you'll help yourself so much. And right off the bat, if you take a look at the bottom of the slide, you'll see three numbers that will tell you the whole story. Okay, savings rate is about 4.5% and inflation is about 3.5%. So what that equates to is your real return is only about 1%. That gap right there is the entire problem that we're going to break down today. So let me start by telling you what everyone's been told their whole life, okay? Save your money. Put 20% of every paycheck away. Let it sit in a savings account, right? And watch it grow. I mean, that's what traditional parents taught you. That's what teachers told you. A lot of different articles that you've read, books, that's what's been told. And I get it because on the surface, it makes sense. And I get it too because that's what I was told when I was younger. But right now, right, this is what I want to share with you. In this economy, the numbers are telling a completely different story. And you can see right here on this slide, if you look at the table, on the left column, it shows you what they tell you, and on the right column, it shows you what exactly happens. Take a look at that second row in particular. They say your savings will grow over time, but the reality is that $10,000 saved today only buys about $7,089 worth of stuff 10 years from now. That's a basic concept that, I mean, so many people just don't recognize and um, haven't heard about. Although we every day we complain about prices going up, right? Inflation going up. We look forward to our cost of living arrangement raises every year. That being said, inflation's eating about 3 to 4% of your savings every single year. And that means if you save $10,000 today, in 10 years, it can only buy you about, again, $7,089 worth of stuff. You did not spend it. You did not lose it. Inflation just quietly stole it from you. And here's the crazy part. Most savings account pay around 4 to 5% interest right now, which sounds okay, but after inflation cuts it, your real return is barely about 1%. And that's not truly growing your money. That is just losing it, in my opinion, slower. And if you look at the very bottom of the slide, it sums up perfectly. The advice ain't wrong. The strategy is just incomplete. Saving without investing is like running on a treadmill. You're putting in all the effort, but in reality, you're actually not going anywhere. I know this goes against everything that you've been told, but stick with me, and I'm about to show you the real math behind all of this. And once you see the numbers, you'll understand why just saving is one of the worst things you can do with your money. Now, let me show you the actual numbers because this is where it's going to get real, okay? Let us talk about inflation. Inflation is the rate at which prices go up every year. Historically, inflation in the United States has averaged about 3 to 3.5% per year. And that might sound small, but let me show you what actually happens to your money, okay? And if you follow along right here on the slide, if you look at the top, You'll see three boxes side by side. On the left, it starts with $100 today. Then look at the middle box. That same $100 is worth $70.89 in 10 years. And then on the right, in 20 years, it drops all the way down to $50.28. You still have the $100 bill in your hand, but it just can't buy as much anymore. I mean, of course, we've all experienced this on a regular basis, on a daily basis. Half of your purchase power is practically gone. Now, scale that up. Let's say you saved $50,000 in cash, right? You did everything right. You worked hard, you lived below your means, and you saved. In 10 years, that 50,000 only buys about $35,445 worth of goods. So you lost over $14,000 and you didn't even spend a single cent. All you did was save it. And you can see that the breakdown right below those three boxes on the slide, it spells out save 50,000 in cash today. And in 10 years at 3.5% inflation, it only buys $35,445 worth of goods. You lost $14,555 in purchasing power without spending a single dime. Now, I know some of you are thinking, but my savings account pays interest. And you're completely right. A good savings account might pay 4 to 5% right now, but after inflation, it takes 3 to 4%. Your real return ends up being about 1%. On $50,000, that's roughly $500 in a year of actual growth. That's not building wealth. That's barely treading water. Let that sink in before we move on. Just think about it. All right. Now, on this slide, it's the one that changes everything for people, okay? Especially if you're young, pay attention to this. This is going to be very, very important for you. I want to teach you about something called net present value, also known by its acronym as NPV, okay? This is one of the most important financial concepts you will ever learn, and almost nobody talks about it. Once you get a hang of this concept, you'll be using it for many, many different things that you calculate, for your own personal finances, for things that you're going to buy, for loans that you might take out in the future, etc. Okay? So here is the basic idea. Money in the future is worth less than money today. Not because you lose it, but because inflation makes it buy less over time. Okay? Net present value, NPV, tells you that it tells you what your future money is actually worth in today's dollars. Let me give you an example and you can follow along on the screen, okay? If you look at the left side of the slide, you'll see that the savings trap is there. You save $500 a month for 20 years, that's $120,000 total. And that's great. I mean, if you were able to accomplish something like that, fantastic. It sounds great too, right? But look at the NPV number right below it. At 3.5% inflation, that $120,000 is worth about $60,386 in today's purchasing power. You saved $120,000, but it only buys you about 60 grand worth of stuff. Now compare that to the right side of the slide, which is called the investing path. If you look at that same $500 a month and invested it at a 10% average return, which is what the stock market has done historically after 20 years, you would have about $379,000. Okay, now that sounds difficult, but in my future videos, I want to show you how you can do that, and it's very straightforward, especially for a lot of you tech and app savvy individuals out there. It's very simple to be able to do that nowadays. And I'll talk more about it in future videos, okay? Just take the time to like and subscribe right now, and when those videos come out, right, it'll show you how to set that up and get going with it. All right, so let's move forward. Even after adjusting for inflation, the net present value is going to be about $191,240. Same monthly amount, same 20 years, but the investor ends up over 3 times more real purchasing power, okay? And if you look at the bottom of the slide, it puts it plainly, the same $500 a month, same 20 years, the investor ends up with 3 times, 3x more real purchasing power. That's exactly why net present value matters, okay? Smart investors don't just ask, how much will I have? They ask, what will it actually be worth when I need it? And that is the question that separates people who build wealth from people who just save money and wonder why they're really not getting ahead. Now, let me put this side by side so that you can really see the difference, okay? If you look at the left side of the slide, you'll see the savings account column. You put in $500 a month for 20 years at 4.5% interest, you end up with about $189,000. That sounds pretty good, right? But here's the thing. Look at the inflation adjusted line right below that. When you adjust for inflation at 3.5%, that money is worth only about $95,000 in today's purchase power. You put in 120 grand over 20 years, your real growth is only about $15,000. That is $15,000 of real growth over 20 years of savings. That is brutal, okay? Now look at the right side of the slide, the index funds column, okay? That's the one in the green font. Same $500 a month, but instead of saving it, you invest it in a broad index fund that averages about 10.5% per year, okay? Oftentimes you might hear invest in the S&P 500, okay? And again, for those of you who this is completely new to, these concepts are new for, again, I'm going to create future videos that cover these things and I'll show you how to actually invest your money in those areas. And it's very simple, especially for those of you who are tech savvy already. So after 20 years, you have about $379,000, and you can see it right there. And check out the real growth line at the bottom of that column, $111,240. Compare that to the savings side where real growth is only $15,441. That's a contrast right there. And that shows, I mean, that explains the whole story. You put your finger right on that. Circle around it, right? Same monthly amount, same 20 years, but the investor ends up with almost $96,000 more in actual purchasing power. That is why I say saving money the traditional way will make you broke. Not literally broke, but broke compared to where you could have been. You're leaving almost $100,000 on the table over 20 years by choosing a savings account over investing. And that gap only gets bigger the longer you wait, okay? And time, because time matters so much, okay? We'll get more into that in future videos as well. Now, I want to be fair with you because I'm not here to say saving money is always bad. It's a good thing to save money, okay? It's better than just blowing it away on all sorts of worthless things or things that aren't going to benefit you in the future. There are some real benefits to having money in a savings account, and I want to go through them honestly. You can see all four laid out on this slide and notice that each one has a big but underneath it, okay? That's intentional because every pro comes with a catch. First, if you look at the top left of the slide, emergency fund protection, having 3 to 6 months of expenses in a savings account is one of the smartest financial moves you can make. It protects you from job loss, medical bills, car repairs, all those surprise expenses that, of course, life throws at you, throws at all of us. But here's the catch. Anything beyond 6 months is just sitting in a savings account, losing purchasing power to inflation every single day, as I've been showing you in the previous slides. Second, short-term goal saving is okay. If you're saving for a vacation, that's sensible. If you're saving for a car or a down payment that you need in the next year, savings account makes perfect sense. You need that money accessible and you can't afford to lose it in a market dip. I get it. But money that you will not need for 5 or more years should absolutely be invested, not just in the savings account sitting around. Time is the investor's greatest weapon, okay? Third, peace of mind. There's real psychological value in knowing that you have cash on hand. Sleep matters, stress matters, but that peace of mind starts to disappear when you realize inflation quietly stole 30% of your purchasing power over 10 years. None of us wants that to happen to us. We don't want our money to be worth less. Fourth, if you look at the bottom right, take a look at the slide, bottom right, zero risk of loss. Savings accounts are FDIC insured. Your principal cannot go down. The stock market can drop 30% in a single month. But here's the thing, with a savings account, you're guaranteed to lose purchasing power. A 1% real return means your money is barely growing at all. So yes, there are real reasons to save, but in every single case, there's a big but. And of course, in this case, that but is inflation. Now, I know what some of you are thinking. Okay, so what am I supposed to do with my money then, right? Great question. And I want to be clear about something first. I'm not saying don't save any money. Saving is step one, but it can't be the only step. You got to be smart about your money. So here are 4 things you should be doing instead of just letting your money sit in a savings account or a checking account. And you can see all 4 numbered right here on the slide, okay? If you look at the top left, number 1, invest in index funds. The S&P 500 has averaged about 10.5% per year over the last 50 years. The fees are almost practically nothing. You'll get a broad diversification across those 500 companies, right? And one thing that people don't realize is that those are, I mean, in order to be a part of the S&P 500, you have to be one of the top performing companies, right? So automatically you're getting the top performing companies out there when you invest in the S&P 500 already. The power, you're going to get the power of compound interest over 20 to 30 years. And number 2, you want to invest in yourself. Okay, Warren Buffett said that the greatest investment you can ever make is in yourself. All right. So that means, hey, develop your skills, get some certifications, broaden your understanding of things, educate yourself, whether it's traditional, formal, or just learning online, learning on YouTube, things of that matter, right? Make yourself more valuable. Think about it. Uh, a course that raises your salary by $10,000 a year has essentially infinite returns on investment. A book that has taught you to be able to become more valuable to the marketplace is going to be infinite on ROI. No savings account can compete with that. Number 3, build additional income streams. Side business, freelancing, digital products, okay? What's important though is that do what's going to be the best fit for you, okay? Don't just do something because it's going to bring in a source of income. Do something that that's not going to drain you, all right? And every extra dollar that you earn is going to be a dollar that you can invest and not just, of course, put into your savings account. Then number 4, keep only 3 to 6 months of expenses in cash, okay? That's what we call your emergency fund. It's absolutely something that, should be readily available in the event that you need to use it. But everything above that should be, you know, everything else. I mean, it should be working harder for you in your investments, okay? Your money should be making money for you. Your money should be making money for you when you're sleeping. And if you take a look at the bottom of the slide, it says it best. The goal is not to stop saving. The goal is to stop only saving. Because when your money just sits there, again, inflation's gonna eat it alive. All right, so let's wrap this up with 4 things that I need for you to remember, okay? You can see all 4 numbered right on the slide, so please follow along. Number 1 at the top. It's been the theme of this entire video, okay? Inflation destroys the value of your savings every single year. I hope you get that. And as it says right there on the slide, at 3.5% inflation, $100 today is worth only about $50.28 20 years from now. You don't want that. Your savings account can't keep up. Your savings account interest rate barely keeps up. And most of the time, it doesn't even do that, okay? Number 2, net present value reveals the truth about future money. And as I mentioned at the beginning of this video, if you're young, if you just got out of high school, if you just got out of college, maybe didn't study finance, net present value, NPV, is going to be one of the most important things for you in your life, okay? So keep that in mind. NPV. If you save $120,000 over 20 years, the real purchasing power of that money is only about $60,000. But of course, if you invest that same amount, instead of the $120,000 being worth about $60,000, it could be worth over $191,000 in real terms. Next, number 3, and this is the one that I really want for you to look at on the slide. Saving alone costs you almost $96,000 over 20 years. That's the same $500 a month, the same amount of discipline that you put in to save all that, but vastly different outcomes because of where you put the money. That's not a small difference. That's a life-changing amount, and especially when you start focusing on your retirement savings, you'll certainly want to make sure that you can build your wealth. Number 4, the last one at the bottom, is save your emergency fund and invest everything else. So keep 3 to 6 months of expenses in cash where it's readily accessible, in case you need to use it for some sort of emergency. That's a smart move. But everything else above that, it's got to be able to beat inflation and compound over time, okay? Be able to make money with your own money while you're sleeping. So I know a lot of this goes against what, the regular folks out there, your parents have taught you, society typically taught us growing up, but the math is the math. And the math says saving alone will not get you where you want to be. And that's it. I want to leave you with this thought, okay? And you see it right here. Your future self will thank you, and I promise you that. Your future self will thank you for understanding how money actually works, okay? I know there's already enough pressure just to save, and everyone around you might be bragging about their savings account, how much money they've got, right? I mean, that's all over social media, but here's the truth, okay? The people who actually build wealth aren't the ones who save the most. They're the ones who invest the most. They understand that inflation is silently eating at every dollar that just sits in the bank account, and they understand net present value. And they know that future money is not worth as much as it seems. And of course, they put their money into assets that grow faster than inflation. And if you take a look at the quote in the middle of this screen, it really sums up everything that we covered today. The best investment you can make is not in a savings account. It is an asset that grows faster than inflation and in the knowledge to manage them. I'm not saying that savings accounts are useless, okay? Your emergency fund absolutely belongs in a savings account, but everything beyond that, again, needs to be working harder for you, right? Make your money work for you. Make those dollars work for you. Every dollar sitting in the savings account that's not making money for you is losing. And once you gather that feeling, that understanding, you're not going to be able to stand it, right? So save smart, but invest smarter, and let your money work as hard as you do, really. I just want to end this by saying that everything that I shared in today is based on illustrative examples, right? Using historical averages. It's not, you know, just my opinion. It's been researched. Do your research on this. It's out there readily available for you to look into as well, right? The knowledge is out there. Just learn about it. Ultimately, I hope that this gave you the confidence to think differently about what everyone has been telling you on saving your money. And you know what? If this helped you get a broader understanding, please like, comment, and subscribe. Again, if you have any questions, right, feel free to drop it into the comments. I appreciate that, in fact, and I will certainly try my best to respond to you all. Please just drop that question into the comment. If you think that this can help somebody out, share this video with them, right? Save it in your bookmarks, in your watch later, or in your playlist, whatever it is. If you think that this can help somebody out, that somebody you know out, right? Share this with them, and especially share this with those who thinks that just putting money into their savings account or burying it into the ground in the backyard or something like that is going to be great for them. Okay, share this video with them. If it could change the way that they think about money forever, that is gonna, you're gonna help them out too. So, again, thank you so much. Give me a like, subscribe, and watch out for my future videos as I add more onto this type of information. Okay, take care, and hey, make it a great day.